Some headlines from your release this morning. Your revenues are up. Other key metrics seem to be moving in the right direction. Give us your overall verdict then on the numbers you put out this morning.
Well, I think it's a journey for Crest. So we IPO'd back in February 13. I came to see you then. We set ourselves some targets of 2,500 homes. We did that 18 months ahead of programme. We set ourselves some revised targets then through to 2016 of saying towards £1 billion revenue and around 3,000 homes. I think after the election now we've got greater clarity and certainty going forward. Help to Buy is a big help. Employment's rising, wages growth, and you've got some of the best mortgage rates I've ever seen. So we're now setting ourselves a new target through to 2019 of 4,000 homes and 1.4 billion revenue. So I think you can see the trajectory is in the right movement.
Just to tell us then help us interpret how the election has moved the housing market, because that matters for interpreting your results, but maybe for also looking at broader numbers coming out of the housing market. Did it cause just a brief hiccup that now we're through, or does it still have a lasting impact on the housing market?
No, interestingly, we were anticipating there would be a slowdown. There generally is in the lead up to a general election, but this year we saw no decline at all, and I think that's probably because there's a lack of housing stock. So with new build house builders, we're there each month, building, selling, unlike the second-hand market where it's very discretionary as to whether you put your home in the market. So we saw no blip at all, and purchases carried on. I think with jobs and earnings growth, it's a great time to buy a house.
How worried are you about a rise in interest rates? I mean, the Bank of England has been threatening to do something for quite a while now, and it comes and goes exactly when. But the talk is that maybe in the first half of next year we finally get a move. Do you think that will impact new buyers?
If you look historically, the decision to buy a house is more than just about affordability. It's a home for life to live in. And so MMR, I think, has been a great... George Carney putting MMR in last year has been great because it's really taken the froth out of house price inflation, and you really want prices to go up in line with earnings. So affordability is checked every time we get a mortgage. So there's already stress testing going on. So, and as you know, a lot of people, fixed rates are coming to an end and they're getting great new variables.
Do you have any plans as a business to broaden your business away from the South East? You're very much focused on the South East, aren't you, at the moment? But what plans do you have further afield?
Well, one of the things we've announced today is, as well as being a South East home builder, we're also very interested in the private rental sector, because home ownership's declining at the moment from mid-60s down to upper 50s. And so where's the gap going to come from? Well, we think private rental sector is going to be an area to fill. The trick was to get institutions interested, because you really want long-term investment. So we announced a month ago that we'd just done a deal with M&G for a large site in Bath, and now we're looking at a suburban model. So we see part of the growth I described of getting up towards 4,000 with PRS. Now, we're not going to hold that. We're going to sell that into institutions for them to provide much-needed rental accommodation. Is that
a house builder suggesting that they see the top in the housing market, then, if they're looking to get into rental?
Well, you could say it's covering our bases, and it's given us plenty of flexibility.
What about the share price? I mean, we've just pulled up a chart of what your share price has done over the last year, up 40% year to date as well. So, aside from what that chart shows, strong performance, of course, very much tied to the housing market overall, I guess. What do you see as the headwinds that face your business at the moment? Well,
the normal headwinds, as we said, is interest rates, and at the moment they're very low, probably the lowest that I've ever witnessed in my career. So interest rates, and it's generally the decision to buy a house, I think, is two factors. Have I got a job, and do I think I'm going to have a job in a year or 2 years' time? If you overcome that, and of course employment's rising at the moment, then people take interest rates into their stride. So it's really jobs is, I think, the real key, and interest rates.
How much is international demand still driving house prices in the south-east of England? Obviously London being the main part of that.
Not so much in the south-east. Clearly in London it's a big driver, the overseas market, and whilst we're limited, we only produce 200 or 300 homes a year in London. We know there we sell into the domestic market, but we know that we've got interest from overseas buyers. And some of my colleagues in other house builders will tell me that it's quite high, up to 50%. Outside of the south-east, or in the rest of the south-east, it's really domestic market.